communication where it has actually started to flatten out.
Capital, Conrad, welcome to Ticker Newsroom.
Hi, thanks for having me.
That started as a traditional stockbroking business and has evolved into a fintech.
We started, 2016?
Hi everyone, thanks for tuning in. So today we have with us Ivan, CEO and Managing Director of Australian FinTech OpenMarkets Group, to talk to us about their pre-IPO capital raise and to answer some of the questions our macro investors have had about the company. So OpenMarkets Group have launched their pre-IPO raise, approximately 10 million through institutional investors, but also have opened up an avenue for high net worth individuals to also participate on some similar terms. But before we dive straight into that, Ivan, look, I thought it would be sort of a good idea to just start off by you telling us a little bit about yourself and your background and also how you got involved with OpenMarkets Group.
Cool. Well, firstly, thanks for having me on, Conrad, and also appreciate that you decided not to butcher my surname. So that was also nice. So yes, look, my background is actually I used to be a futures derivatives trader, transitioned into tech back in 2013. Started a company called TradeFloor, which was really specialized around. After a couple of years in a big company, big tech company, transitioned, set up a company called TradeFloor, which specialized in options risk management systems. That was it was quite an experience, especially as all the changes in the market were happening. It made it harder and harder for options people to participate. Yeah. And then we diversified, we built an options trading game for the ASX, built our own retail trading platform, and okay, we probably should start looking at more things than just options. So at the same time, we were sort of trying to get into get a full clearing participant, and Open Markets came up at sort of about 6-9 months after we were in that search, and I tried to get who's now the COO of the company to come and work for me. I was building a really cool compliance tool, and I wanted him to train the AI model and sort of run the inputs, and so he reverse sold me in his weird kind of legal way, and next thing you know, I was chatting to the major shareholder, and about 2 weeks later, we sat in this very room and signed a heads of agreement, which is like a Wednesday night. Monday came in, started, and within about a month of that, combined company of 28 went to about 17 as we gutted the entire thing from the inside, of which, you've got to hear the whole story as a client of Open Markets. And then after that, we're now at 75. So, big sort of shift, more importantly, profitable, and significantly improved everything that's been going on in the company. Tripled the trading, doubled the revenue, cut out a whole heap of unnecessary costs, people, and technology, and replaced it with all the stuff that TradeFloor's been working on for about 6 years.
Yeah, okay. So the good old 1 step back, 100 steps forward, eh?
Yep. It's a bit of a leap. I don't remember, there's no steps, but we did spend about 3 months before the transaction actually occurred, just kind of running through, what should we do? How do we do this? What do we stand for? And working with Dean on that, who's the CEO, has been phenomenal. And then essentially when we got in, we had the plan laid out, what we were doing on B2C, what we were doing in B2B, what was important. And it was a company. I mean, that logo is the last thing that's left of the old business. And that we actually need to change the color of, because that's no longer applicable either. I mean, who comes up with those colors? Seriously.
Yeah. I mean, so I guess, so on that, so obviously there's been a lot of transformation within the Open Markets business or the Open Markets Group. I guess, how does TradeFloor come into that? Everyone talks about synergistic effects as this kind of, buzzword. But in your case, I think it's a real practical sort of outcome. How did TradeFloor come into it? How did your experience with TradeFloor sort of help you, change Open Markets to what it is today?
I feel like half of this question I should ask you, because you've given me some feedback on this yourself. But the reality was is that there were some pretty expensive vendors in open markets that weren't really up to scratch, which were replaced immediately with our tech. The other thing as well is that Tradefloor has a very good relationship with a lot of B2B clients, AFSLs and advisory groups in the market through the risk management system that we've ran over all these years. And that's almost a monopoly, really. 60, soon to be 70% of retail derivatives flow is managed by our risk management system.
Yeah.
And so I think that we came in with a very good reputation on the B2B side, with very good connections across the key people that operate within the space. And what that meant is that when we came on, we knew exactly who to reach out to in terms of the best stuff in the marketplace. We knew which clients to speak to. We also know the pain points. Basically nobody likes clearing participants in the market, right? Just on the B2B side, it's just a pain and it's a cost. So we've really set out to go in and see how can we change that? How can we improve that? And I think that we've managed to pick up some top tier people from around that have really changed the way that we communicate with our clients and our overall offering. So it's tech, it's people, and it's soft skills that people don't really talk about.
Okay, perfect. I guess moving on to the next question. This one is a thematic that has been obviously quite.
You're not going to ask me about GameStop, are you?
No. That's later on. No. So COVID was obviously a major impact for a lot of companies, investors, individuals, you name it. Some companies or a select few performed better in the conditions, which is always quite interesting. How did Open Markets tackle the COVID period, and did the group come out on top, do you think?
It definitely came out on top. I mean, it's definitely posed its own challenges. We started. I came here, addressed the stuff in middle of December, and then and as we're trying to restructure this business, suddenly we've went from having really one office and a small satellite office in Brisbane, which is where our tech is, to suddenly having basically 75 offices individually operating and kind of working from home. We were lucky in the sense that because we're so regulated by ASIC and ASX, we had to submit BCB plans.
So lucky.
Very early on. Oh, it's amazing. So anyone listening from ASIC and ASX, we really appreciate the guidance that you've given us. Anyway, but one of the things that they have asked when everyone was kind of writing it off as a thing or not a thing, they came up to us and said, "Hey, have you got all the plans in place? Have you got all the structures? Are you going to be able to run this thing from home?" To which we said, "Really?" And I remember we kind of had this conversation. Do we buy another 3 laptops and 3 mobile phones now, or do we not?
Yeah.
And, I think we ended up buying about 50 later on as we started scaling.
Yeah.
COVID produced a really interesting opportunity where suddenly a lot of really high quality people got laid off. So we hired a lot of people from #OpenToWork on LinkedIn, and people who were in difficult positions, which added so much drive to culture. We acquired a company called C-Cube out of Voluntary Administration as a result of COVID, which was a bargain for us and also a godsend for the people that we re-employed. There's about 12 jobs that we saved there. And then really it's just been about, you get the hand that you're dealt with, you can't really change it. So we made the most of it. And, March was interesting because obviously everyone started trading and we got to see how little of the market we actually really possessed. We were about 4.25% of retail flow, which is sizable, but it's not crazy. And then by now, the end of last year, circa January, we just had another record month in Jan. But we're about 8% of the retail flow now. And so a lot of there's been a big move there's been an increase in digital offerings and people participating in that. Open Markets does the trading for Self-Wealth and Superhero and StockSpot, a lot of those robo guys, as well as our own retail offering. So we've had a lot of people come and use us either directly or sort of on a B2C model or a B2B to C model. More trading, more interest in that. And also as that's been going on the back of Royal Commission, there's been a move away from a lot of funds in particular towards passive investors. So we've got like 10, 20, $30 million accounts with $20 million of holdings in like a passive ETF, right?
Yeah.
So it's interesting. There's definitely been some interesting changes and shifts, and I think for us, it's just as you've experienced from your business, it's just a matter of adapting and changing and just trying to understand what the next, how does this impact the next 12 to 36 months.
Well, speaking about the next 12 to 36 months, so obviously with last year being a massive, really a huge growth story for you guys, I think, not only as sort of an outsider, but also as a client of OpenMarkets prior to you jumping on, it's been sort of extraordinary to see, the growth, not only in sort of the numbers, but just your offering and how you're sort of engaging with your clients now. I guess the interesting part is as you grow, so does, I guess, the size of the competitors that you're now dealing with. So you're sitting, I guess, pretty closely with the big four banks now. You're overtaking a lot of them when it comes to volumes. All of them have some sort of interest in the same space that you sit in. How do you plan to compete with these guys moving forward?
Yeah, so big thing happened a couple of 3-4 months ago. We overtook NAB by volume and absolutely smashed them later, and now kind of closed in on number 2. CommSec is still the dominant beast, and a lot of that is distorted by the CommSec Pocket app, which is high volume and absolutely zero margin.
Right.
It's a client
Interesting consideration, yeah.
And so, I mean, I think that as far as the big four are concerned, and big four is interesting, like they're all getting out of clearing. Post-Royal Commission, everyone's trying to get into the stuff that they know best, which is get a whole heap of deposits and lend it out. The lending out part, I guess, is the one that neobanks didn't figure out. But anyway, so I think that they're sort of in a different world. I know the guys at the big banks quite well, and they're thinking about the topics that we're thinking about, like let's try address them in 5 years. And by that stage, the world's going to change. I don't know if it's necessarily competing against the big four. Those guys, they've got pretty one-dimensional products. They typically resell the technology by Iris. They don't really spend any innovation themselves, and it's just an ancillary product for them. The guys that run it are on pretty big salaries, not really driven to do anything but make sure that they can extract every last cent out of the maximize their KPIs basically, or maximize the rewards. So I think that the entire dynamic is somewhat different. And that the way your guys are competing with this is in the same way, right? It's the small guy versus the big guy, but the big guy doesn't see it really coming. It's like a sleeping kind of version of David versus sleeping Goliath.
100%.
Kind of. Yeah, so the way you beat the big guy is clearly just add some Rohypnol into them, and then then.
Yeah, well, it's crazy because as you said, their KPIs are pretty much fixed in keeping their jobs and not really taking those risks. And I guess what's really great to see from you guys is you're always doing something to improve, and it looks like the next thing you guys are about to launch is B. So tell us a little bit more about B and I guess how you guys plan to roll that out as well.
Yeah, so I think that it's an interesting point. B is something that builds on top of our B2B infrastructure, our B2B client base, as well as our B2C client base. What we're seeing is that it's getting increasingly harder to market to clients. It's becoming increasingly competitive space. So smaller fintech clients are struggling to penetrate the waves unless you've got big marketing budgets of someone established like Self-Wealth, or someone who's got a good amount of backers like Superhero. It's a difficult market to play in. So what we're thinking is, well, let's create let's improve the one problem that everyone asks, and that's how do we get better financial literacy in the market? How to understand make heads of tails of shares and investment vehicles, and what should we actually be doing, and doing that on a scale of advice. So it's not having like a lecturer go on and tell you what, this is what PE ratio is, but actually have a fun, engaging kind of de-jargoned version of making some words up here, but anyway, de-jargoned version of improving financial literacy, as we've been doing for years with options, and getting the right group of people in. And we've bolstered our team significantly. We've picked up the CMO out of Zinja, one of the co-founders of Zinja, started a couple of days ago, last week, I think. Of all things that Zinja did badly, marketing and branding was phenomenal. Pink cards and the interest that they generated. Our head of marketing has created an amazing tone of voice, ex-Vino Mofo guy. And really knows how to speak to millennials in a fun and engaging way. Borderline angers some of the audience, but that's okay. That's because it's all about the masses. So I think that we've got a unique opportunity here to go in and say we've got really rich infrastructure. Let's go in and bring in B2C clients and then distribute them to our B2B to our B2B network. So that means that if you've got a guy that signs up for B in North Sydney, for example, and then you're still in North Sydney, right?
No, we're in Sydney now. We just moved.
Oh, geez, sorry.
Cheap COVID prices, COVID rent.
Oh, congratulations. Jeez,
yeah, no, it's great.
I'm like this. I'm seeing the background. I'm like, that doesn't look like North Sydney anymore. There's no sheep or anything. What is going on? So really focusing on saying, okay, well, there's a new sign up in this particular area, which might be someone that you cover. By the time that they're ready and they've got a basic understanding of finance, well, there'll be a time when they say, hey, you know what, we need a planner, we need an advisor. That's when we match them. And until then, you go all that basic stuff that that they should be getting acquainted with. That's the part that we'll handle. And if they feel like all they need to do is have a robo advisor, then they can do that, and then connect with a single sign-on, I guess, into the entire ecosystem, basically, without having to continuously open up new accounts everywhere, verify yourself, get different bank accounts, and just have that kind of mess part sorted. So that's a very long-winded way of explaining what B is, but B is the future, basically.
Well, speaking of future, you've got, I guess alongside another big project this year. Let's get straight to it. You've got the IPO. It's the sort of really exciting part with, I think, any entrepreneur. Can you tell us about, I guess, your roadmap to IPO, and also why now? What's the sort of advantages of the timing for now?
Yeah, great question. I think that it's an interesting point. As an entrepreneur, you don't really think about listing. It's kind of like, oh yeah, one day that'd be cool, whatever. And then for us, that one day happened pretty quickly. I think we had such a massive story and such long-term potential in terms of what we've sort of been, really it's just been shaping and actualizing a lot of the thinking that we've done over the past 5 years. Ironically, OpenMarkets had very similar thinking prior to as well, and just kind of structuring in that and having a track record of delivery now. And so it came on with a bunch of advisors. We think, okay, well, how do we start? How do we scale this thing even more? Got in Investec as our advisors, and they said, well, you know what, you can look at things like P and stuff, but really you should look at a listing. You've got an exciting story. It's a retail play, so you get good retail coverage out of that as well. So it just makes sense. Market obviously then heated up as well, and more than 1 in 4 listings last year was tech focused. This year looks like it's going to be even more so. So we're in the right space, and there's a lot of demand for it. Then further to that, we've got a lot of people coming to us and saying, hey, how do we invest in you? And we go, well, are you a sophisticated 708 investor? They go, no. We go, well, then that's your answer. We can't. And also we've got the advantage of securing an amazing code called omg.asx. So, seriously.
Locked that one in, have you?
I believe so, or close. So I hope that no one who listens to this is going to get ahead of me. But
that in itself will rally the share price, I'm sure of it.
Oh, of course, yeah. Let's hope on fundamental reasoning as opposed to GameStop style. But
yeah.
So we have all the infrastructure in place. We've bolstered. and we've matured a lot in our thinking since we started that process as well, in terms of, the structure that we need to have, P&L responsibility, and kind of how do we go from, 28 people to 75 to 750.
Yeah.
And, another thing as well, it gives us we've been quite active on the M&A front for a small company. We're going to get even more active in the next couple of years. And it makes sense to be listed. It's effectively, that gives you so much benefits to more capital and et cetera, to be able to grow faster. So I think that there's a lot of downsides to being listed as well. There's much more disclosure, much more, that you've got to be very clear about what you're doing and not doing. I move quite quickly, as you've noticed, and I speak very slowly though, so I hear. So that's good. But yes, there's a lot to achieve in a short period of time, and hopefully, the listed environment kind of helps us get there sooner. And yes, that's, there's no sell downs from management. We're all trying to, I'm trying to get my hands onto more. We've just kicked off pre-IPO with Instos now. That's been going really well. Today's really the first busy day. So I decided to take my lunch break to, it's the first time I brought in lunch to work ever, I think, basically. So anyway, so I kind of had a quick bite and back off 15. So to get back on it, but it's been busy. It's been great reception, and I guess one of the things that we've been thinking about for a little while, and now we have the opportunity to do, is just to clean up the register a little bit with the old pre-OpenMarkets group. Shareholders that kind of are there for different reasons, and now kind of try and get a bit more in this entity, because I think that there's a lot of people who are starting to understand the potential of this business. I've been in it for a while, so I really want to try and maximize my exposure heading into the listing and beyond.
I think that's always important to see. I guess so that I can let you finish off your lunch.
It's okay. It's fine.
Last question for our clients and investors. Can you break down sort of, I guess, the pre-IPO offer, what it means for OpenMarkets if it fills your target as well, and just kind of give the investors a little bit more detail about the actual offer?
Yeah, so I've basically what we've done is we've split it. We've got a Insto only pre-IPO offering at the moment, which is done as a convertible note. That's targeting 10, looking like at the stage, I don't want to jinx it, but it looks like it'll be about 15. So we'll probably either scale back or choose what we do there. That's new capital going into the business to refinance some existing debt, put into technology going forward, and marketing strategy until we go into the IPO. The IPO roadmap is about 6 months. So it's a pretty aggressive time. We're about to start doing the DDC meetings next week. We've got our accountants locked in, and it's looking like it's a pretty good pathway there. Board's almost finalized, and some really experienced people coming on, which is great. Not only will they add the independence that we require, but also all very accomplished people across media, advertising, and financial services. Some of the most accomplished people I've come across with, which is important for me as a major shareholder as well, to look up to the board that's trying to, I guess, 100%. Make sure that you're doing the right thing.
Yeah.
So that's that. The other parties, and the parties that you and a few other guys have been asking, how do we participate? And I'd nearly had some arguments about that with my corporate guys about how we do it. But essentially, the strategy around this has been to go in and say, okay, well, there are some existing. There's some convertible notes that are still sitting on the balance sheet that we want to go and convert into equity. There's still some equity holders that potentially aren't as bullish on the future as we are. Which creates good opportunity as well for those that know where their company is going. And so there's a single transaction special purpose vehicle we're finishing setting up now in the next couple of days, which sole purpose is to go in, and that's really to provide that secondary to go in and acquire some of the existing shareholders or reduce their exposure. And so thus the structure of it is that we're doing initially $4 to $7 million. And the reason why I say 4 to 7 is we're not 100% sure exactly how many shareholders will say yes and no. So it'll be almost an open-ended item. We anticipate that there is about 20 odd million all up of people who we might be able to acquire, which represents circa about 10% of the register. So the idea is to try and be able to clean that up ahead of IPO, and really at the same time as the pre-IPO. The pre-IPO is as I mentioned, is a convertible note. This is actually done as an equity round directly, pre the convertible notes, and as I said, secondary only, buying out existing shareholders only. So that's how this SPV is structured.
So it's even a cleaner opportunity than the pre-IPO, really.
Yes, definitely. Yeah. And so that's, as I mentioned, that's only open to institutional investors. This allows people to co-invest along with Dean and myself on the as directors who will be investing in the SPV as well to acquire that. Just gives us leverage to be able to go and acquire. As soon as the IPO occurs, then there's just a in-specie transfer onto the full register, probably about a day or two before the IPO actually happens. And so that way then we can hit all the requirements that we need to hit. This one is just the transaction is simply a off-market transfer between existing shareholders and the special purpose vehicle, and we'll just continue issuing units until we exhaust everything that we can go and acquire.
Okay. Well, sounds all very, very exciting. I think it's probably going to be for us anyway. We've pinned it as one of the probably most exciting IPOs for us this year. So if we can get any of our clients involved, we very much appreciate it, Ivan. So we'll be hopefully distributing this to our client base and getting the feedback from them. So I'll be in contact with you shortly. But thank you so much for your time, Ivan. I know you're a busy man, so I appreciate you sort of taking the time to sort of answer these questions for us and the investors. I guess we'll be speaking soon.
Sounds good, mate. And I always appreciate seeing your face, which is something that seems to be more over video calls than it is face to face for whatever reason. But anyway, exactly, mate. Thank you so much. I'll chat to you soon.
Sounds good.